Brian Gormley with another edition of Where in Greater DC. Hope everyone's New Year was great, and holidays, and relaxing, refreshing, etc., etc. So we're back in town again, and back to work, and we've got a little bit of good news with this tax law extension, so we'll get to that in a second. As everyone knows, we do film all over the Greater DC Baltimore region each week, different location. And if you can guess our location and be the first one to submit that guess to support at Cornerstone Properties, homeinfo.com. That's support at Cornerstone Properties, homeinfo.com. Don't just hit reply to an email that you get. Then you get to have a prize if you're the first correct contestant. So good stuff there. And don't forget to take advantage as well of our short sale negotiation services. We do negotiate short sales, and we purchase rehabs. So if you have a property that is in need of rehab, short sale or not, by all means give us a call and let's chat. So tax extension time. I think a lot of people don't really understand all of the sort of the tax law, and I should say that this is not tax advice, so definitely consult your tax attorney or CPA, especially for individual circumstances. But generically speaking, let's take a step back for a second. Section 108 of the tax code deals with cancellation of indebtedness income. So let's say you get a loan for $100 from your friend, and your friend says, "Hey, look, I see you're having a hard time paying this back. Don't worry about it. It's $100. Just don't worry about it." And you pay a little bit, but you didn't pay the rest. So they say, "Okay, cancel the rest of it. You're good to go." Well, the IRS would say that $100, whatever you didn't pay back, let's just call it $100, is income to you. It wasn't income when it was a loan, but it's income when you decide not to pay it back. Okay, right? Because you don't have to. It's been discharged. So that's income. That's fair. That's a fair position to take. Same thing in the housing industry. If you get a mortgage, you've got to pay that back. If the bank decides, "Hey, don't worry about it. We're going to cancel this because it's a short sale, or we foreclosed and now we're just wiping away the debt, we're releasing the liability, the deficiency," that is potentially taxable income to you, subject to one of two exceptions. Okay, the primary residence exception is the exception that was promulgated under the Mortgage Debt Forgiveness Act of 2007, and it was sunsetting at the end of 2012. This is what everyone was focused on. They forget about the other exception, the insolvency exception, which we'll talk about in a minute. So the primary residence exception goes something like this, and it's been extended. So this is good news, right? It's been extended for 2013, so 1-year extension. We'll see if it gets extended beyond that. It goes something like this. You buy a house, you get into primary residence, you get a loan, and then the bank, you go through a short sale or foreclosure, the bank waives the deficiency. That income, that debt that's been waived is income to you, except the law says because it's your primary residence, we're going to wipe that slate clean. It's not going to count as COD income under Section 108. Okay, so there's a little bit of an exception to an exception. If that money was purchase money, you're good to go. If it was refinance money that you got that is now getting waived, then that also is good, unless it was money that you used to pull out proceeds and use it to, say, take a vacation, pay off credit card debt, or whatever. If you used it to enhance your house for qualified housing expenditures, build an annex, or whatever, then you're okay. But if it's to do something else, then that money is not exempt under that provision. Many people obviously are beneficiaries of this provision, and so we're very focused on its extension, and NAR was lobbying very strongly for it. Okay, so if it's not your primary residence, or you've got money that you've pulled out, then you're going to fall into a bucket called the insolvency exception, or at least the analysis for the insolvency exception. The insolvency exception goes something like this. You tally up your assets. Assets would be cash, stock, bonds, value of other houses, IRAs, etc., not your income, just your assets. And then you tally up your liabilities. Liabilities would be mortgages, student loans, credit card debt, whatever, car debt. Not subject property, not the property that we're dealing with here for either assets or liabilities. That's excluded. Then when you get your assets and your liabilities, you compare the two. If you're net positive, then you potentially could owe tax up to the point that you're net positive. So if you've got $100 of canceled debt and you're net positive to the tune of $20, then you're going to have $20 of taxable income. You then multiply that $20 times your marginal tax rate, and you get 25% or whatever it is, and you get your additional tax liability. If you're net negative, if you're zero net negative, your liabilities exceed your assets or they're at least equal to, then you don't owe any tax. So that's a good thing. And most people obviously are insolvent. So even if the primary residence exception didn't apply, if it expired, most people still fall within that insolvency exception and still would qualify to be exempt from tax as a result of deficiency waiver under their short sale or foreclosure, or deed in lieu, or potentially even a loan modification. But nevertheless, obviously this gives people a lot of peace of mind. So that's a good thing, a good way to start off the year, right? And helps those short sales that were on the cusp of closing and just couldn't find a way to get to the settlement table by December 31st. All right, so I did want to just highlight that. So I know it's a complicated area of law, so definitely, again, consult an attorney or CPA for your individual circumstance. And I wanted to fill it inside so you could actually hear me well. But we're going to take a trip outside and do a little panorama now. So send those guesses, support at Cornerstone Properties, homeinfo.com. And don't forget, we do negotiate for free short sales for homeowner and agent alike, and buy rehabs as well. I hope you had a great vacation, and I will talk to you next week. Bye.